Let's also bring on board Sunil Garg, MD, Head of Research Asia Pac Equities at JP Morgan. Sunil, hi, morning. 2013 so far has turned out to be a very interesting year for Asian markets. It's been clear outperformance by Japan, driven by China, and Indian markets have barely chugged along. Will Asian emerging markets shine in the second half of the calendar year?
See, if you look at the Asian EMs, I think it's been a very mixed bag. I think some of the markets in Southeast Asia, Thailand, Indonesia, Philippines have actually done very well. It's really some of the larger EMs like China and India until more recently, and Korea and Taiwan, that have struggled for performance. I think it's going to be a mixed bag here onwards as well. I do think that Korea and Taiwan will struggle on an aggregate basis, although there are bottom-up opportunities in both the markets. I think if you look at India, despite all the headline macro negatives, we've seen a reasonably strong performance very recently in the market. We probably see a little bit of a pause for consolidation right now, although I think we could end up with the year finishing off quite strongly. I guess we can talk about that more. I think China is interesting. There's definitely a lot of structural headwinds, but I also think there is a rotational bias in the markets at this stage, so trading bounces are likely in China. But I think if I were to take the next 6-9 month view, then clearly I think India amongst the Asian EMs looks much better placed, as also some of the Southeast Asian countries.
Right, Sunil, China is a concern not because of the mainland economy, but also because of the implications of a slowdown and the kind of ramifications it will have on global trade. China's President Xi Jinping has said that the country won't sacrifice the environment to ensure temporary economic growth. Does that, what does that mean? Does that mean that in the near term China could slow down further?
Look, what you have in China is a combination of factors. You've got demographics that are challenging, which is causing a structural growth headwind. You've also got an overcapacity, which is cyclically challenging growth. And of course, as you highlighted, the administration's comfortable with a slower growth rate. So, is that going to be a drag on global growth and commodities, for example? I think the answer is yes. But, you also have equally offsetting forces from places like Japan, which will offset some of the slowdown in China as far as global growth is concerned.
Foreign money as well certainly has been sweet in India. The FI investment in equity markets has been strong, and with liquidity on tap in the US and Japan, would you expect our markets to trend higher through the rest of the year? And are the valuations fair at the current juncture?
See, if we look at the valuations on a headline basis, trading on 14 times forward earnings with sort of lackluster 10-12% earnings growth, the valuations are actually a little bit expensive. I think the key issue here really is finding growth opportunities. I think even in India, there are companies that have done extremely well where there's been visibility on earnings and cash flows. And I think in terms of, if you look at India specifically, then there are clearly some macro positives that are coming in place. The government has created fiscal headroom. There's been some monetary easing. Now, if that starts to morph into a better outlook for earnings, then surely there would be room for upside in India. I think in the very short term, you probably see a pause for breath. As I said earlier, I think in a 6-9 month view, I think India definitely is building up to a much better outlook.
Sunil, India also has been dealing with macro issues. India's trade account is not in its favor. Currency is looking increasingly weak. Domestic manufacturing has been under intense pressure. And even while inflation is barely in government's comfort zone, will the macros have a significant impact on investor sentiment, or are the assurances and noises from government supportive and that will fuel the current FI liquidity?
See, look, a lot of the macro negatives, if we talk about twin deficits, if we talk about inflation, I think that's been there for a while as a negative. I think it's understood. It's to some extent, I guess, the market does factor that in. The question is what's happening at the margin. At the margin, inflation is easing. At the margin, interest rates have been reduced. At the margin, there's fiscal consolidation. Commodity prices have come down. I think that is, all of it is going to help offset some of the historical negatives that we've had. I do think that we should certainly look at an inverted yield curve right now. I think that is probably also one of the reasons why you probably get some short-term consolidation in this market.
What's your view then on the INR USD trade, and are we likely to slip to the 60 mark against the US greenback?
Look, 60 is not our house view. Our house view is 55 by year end. But I think one of the more interesting features we've had in the very recent strength in the equity market is it's not been matched by the currency at all. If anything, it's depreciated a little bit, which could possibly be a function of what's been happening with a stronger dollar. But also, I think the RBI is comfortable with ranges, and I think that's certainly how we would look at it, with a 55 year-end expectation, but 60 at this point in time is certainly not our base case expectation.
So what are your top sectoral bets or plays in India at this point?
See, I think, we've seen the RBI ease interest rates, and as we see fiscal consolidation and lower inflation provide some headroom for more monetary easing, financials become certainly one of the more attractive trades. Initially, we would be looking at some of the non-bank finance companies, even the state-owned banks. But I think, the expectation of an easier interest rate environment, continuing lower inflation, financials look like one of the best opportunities out there.
The leaders in pharma, Sunil, and FMCG were the favourites in the rally to 6,200, but returns from these levels are looking difficult. Would you agree to that?
I should think so. Look, this market essentially has lacked visibility in earnings and cash flow. So wherever you've had that in the defensives and the staples, you've definitely had a re-rating. And of course, there's been some M&A or some buyback help as well for these sectors. But if our view on the macro positives is going to pan out, then clearly there is a rotational move into cyclicals, be it financials, be it deep cyclicals. So yes, I think it's probably where we would go as well.
Sunil, what is your stand on financials as a group, financials as a theme, especially when interest rates are headed lower and the big picture argument for Indian demographics is quite supportive?
See, look, the underpenetration opportunity in India, I think, is been there for a while. I think that's definitely helpful. I think the hold back, the headwind that we've had from essentially a much tighter monetary policy, I think as that reverses, that certainly makes the case for financials a lot stronger. And of course, if you have the background of a structural underpenetration, that clearly helps. But at this point in time, I'd definitely be focusing on the lower interest rate angle to be playing the financials.
Commodities too have evidently been a weak pocket. Would you take a bearish bet on the Indian metal names at the current levels?
See, look, I think on a headline basis, a lot of these metal stocks in India are cheap, and clearly that is attractive. I should highlight though that the outlook for metals globally is still challenging. You do have a situation where a lot of metal companies in India have a gearing problem, which will have a headwind as well. I think there are certainly some names which are involved in corporate restructuring. I think that look attractive. So I would be very selective on a name-by-name basis in this segment rather than put a generic approach to this.
So Sunil, infrastructure and capital good as a trade has not worked very well, even though from a long-term view, there is still some scope for bottom fishing here. What is your view on all the regulatory troubles the sector has been facing?
Look, at this point, tempting as it might be, I would rather miss some of the initial uptake in this space simply because the regulatory environment, the clearance for projects has been missing, and I think while there is promise, that is yet to morph into reality. So until we get visibility on that, I wouldn't be tempted. The other area in this space which is important is that you are in, effectively the final run-up to an election year, and our business is going to be taking long-term investment decisions in this environment. That is probably unlikely. So I would not be tempted just as yet in the infrastructure space.
Sunil, good chatting with you. Appreciate you really taking the time out and joining us on the show.